This conference will now be recorded.
Okay, good morning, everybody. It is Sunday, June 6, 2021. This is Greg Morton, and then this is the weekend update brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group for CanSlim Growth Stock Investors. As always, this is for educational purposes only. I'm not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we always want to learn first and only then invest. And of course, CanSlim is a registered trademark of Investors Business Daily. So this weekend, as always, we're going to look at the M factor. We'll cover this in more detail on Tuesday evening in our regular monthly meeting, but we'll hit the highlights this weekend. We're going to look at the 197 industry group list and maybe one top growth industry group trying to fight back and swimming upstream. Oh, got a typo in there, sorry. And then our next meeting will be Tuesday, June 8th, 2021, which is this Tuesday, 7 p.m. Eastern time, but those are online and they're recorded, and I'll give you the details on that at the end. So let's look at the M factor, which is the most important letter in CanSlim and has been very important to us lately as we've been in a sideways, sort of a trendless market, it seems. So per O'Neill and IBD, we look at three things in this order of priority: the action of leaders, that continues to improve a little bit, I would say. Actions of stocks owned, so I'll pull up the group teaching portfolio, and then the market pulse, distribution day count, and price and volume on the index. So let's get out of here and go over to MarketSmith and look at the index chart. So these are the dailies. We'll start with the NASDAQ. So here's where we are. You can see the moving average lines have sort of converged, trying to get stacked in the proper order. So you got the 10, 21, and 50 day are all right there together, 200 days down here, trying to get above these recent highs, trying to get back to 14,000 where there's been resistance. RS line is sort of flattish. So just battling. S&P 500, pull it up. So it looks a little better, trying to hit all-time highs, have the 10, 21, 50, 200 day are stacked in the proper order. So we continue to see more strength here, which reflects the recent rotation we've seen from growth stocks over to oil and gas, materials, that sort of thing. NYSE looks even better, got some nice space between the moving average lines. Again, 10, 21, 50, and 200 stacked in the proper order. And same thing on the Dow, still stacked in the proper order, trying to get back to all-time highs. RS line still a little flattish. Then the small caps been showing a little more strength, pop back above the moving average lines with a little bit more power. That's the Russell. Still have an overall downtrend on the RS line. And then the S&P 600, again, right there, trying to hit, get up to all-time highs at 1400. And again, got the moving average line stacked in the proper order. So if we flip over to Excel and my coloring book spreadsheet that I use to supplement my market direction analysis, a couple things. Here's our 25-day window starting at the orange dot. On the downside, we've had a lot more selling distribution type days. We have 10 of those, and then only 4 green or buying days within the 25-day window. So we just haven't seen strong accumulation on the markets. Our distribution day count, we have 4 on the NASDAQ. They're sort of scattered. The active ones in the 25-day window have a border around them. So there's 1, 2, 3, 4. Those are the ones that have not dropped off. And then on the S&P 500, we have 6 currently, 1, 2, 3, 4, 5, 6, and even had clustering in here. On the MMTS trend line, everything as of Friday flipped back to green. The Dow was the only one that was not green as of Friday. And then also on Friday, IBD went to uptrend resumes. So we keep the distribution day count. We had our rally days back here on the 13th. We still have not had a follow-through day. The rally days haven't been, recent lows have not been undercut, so technically they're still in place. IBD would say, well, we don't need a follow through day because we didn't go to red or in correction on IBD, but it'd still be nice to see one. That would show some strength in the indexes. Market school exposure model is at 4, which I think is 70 or 75% invested, and the window of opportunity has been open. If we look at the breakouts that have happened since the window of opportunity opened and the same day NASDAQ MMTS flipped back to green, most of these have not made great progress. Ford has been strong. Zeus, I think, failed. Several of these are thinner stocks, under $20 million a day. You got a Chinese one on Friday and a super thin bank only trades $1.3 million per day. So not a lot of quality here. Nice to see some breakouts, but be nice to see sort of the names we have. And of course, this week you had all that AMC and GameStop, the meme stocks screaming up again and getting the headlines, and we just ignore all that. If you're a Can Slim growth stock trader, there's not any proper entries on any of those. In fact, it was interesting. I think it was Bank of America said, hey, we're not even doing coverage anymore on AMC and GameStop. These things are not trading on fundamentals or the value of the company. It's totally extraneous market factors. And so we're not even going to cover them now, which I thought was kind of smart, actually, although I don't listen to analyst ratings. I thought that was an interesting take on those. So that's where we are. Let's go back to our presentation. Oh, sorry, didn't pull up the group teaching portfolio. So here's our dashboard page. We'll look at this in more detail on Tuesday night. Currently, we're only 66% invested on a cash basis. It's been a back and forth year, only up 6.8% year to date. Thursday was ugly distribution day. We really got hammered that day, or hit hard. First week of the month up just a little bit, and based on standard position sizes, I mean, most of these are not full, which just not pushing to full in light of the weak market. So there's only really 5.46 positions total, even though there's 10. None of these are at full strength, which would be $60,000. So that's what's in there. We'll talk about that in more detail. We'll look at the ETFs that are in there because that'll be relevant to our agenda for Tuesday. So let's go back to the presentation. We covered all that. So let's look at the industry groups. So here's the whole list out of it. So this is in the newspaper each weekend. It's also in MarketSmith. So I went through and just highlighted the traditional growth stocks. So over here in the top 40, we only have one, so that's not good. It's still not the best environment for us, but we're starting to pick up. Here between start with number 41, going to number 80 over here, we're seeing some of our traditional growth stocks coming back. You've got semiconductor equipment. We're going to look at that. Telecom, are we going to see 5G finally get going this year? Have some computers, that sort of thing. But a lot of the ones we're looking at are still, down in that last group. Computer software is still getting hammered, not doing well. Good news is nowhere to go but up. So we can be encouraged about that. So that's the groups. So you can take a look at those. Again, those are in the paper. So let's look at what's battling out. What's the current news? Big news, national news in the growth sector. We have a chip shortage, front page story, IBD this weekend. So read that story. It'll explain to you all the industries that are being hit. We know the big car manufacturers are making cars that are missing parts. So they just have them sitting there. Tesla, Ford, GM are all struggling with this. And it's just not something that, one would think is going to resolve overnight. That this is going to go on for a little bit, so there should be some growth there. There should be some pricing advantages. There should be some opportunities if they set up properly. So let's go to MarketSmith again and look at just one of these groups. So I'm going to go over here. I know AMAT is one of the leading ones in this sector. So let's go to that industry group, number 47 of 197. currently in MarketSmith, and go to stocks in the group on the right, show all component data. It will pull up all the stocks in the group. So we'll go to one of those. I've already sorted these by liquidity, just so you know. So the most liquid ones are at the top. Go to owner and fund so we can see our ownership over here. So these really are the top three. The most liquid ones are really, I think, probably the top three in this group now. Let's go to weekly charts where we do most of our work. And let's pull them up. So here's applied materials. So you've got a stage 2 base setting up right there. You've got top fund ownership. You have CanSlim earnings and sales. You've got great return on equity, good pre-tax margin, not much debt, trades almost $1.5 billion per day. So liquid stock setting up. RS line is uptrending. It's leveled off a little bit while it's basing. Lamb Research, this one's the one that's in the group teaching portfolio. Have a stage 3 base there. You're like, don't like those. But if you go over to the daily, stage 2 base. So maybe that's okay. RS lines trending up. Again, you got CanSlim earnings and sales, got 5 top rated funds, including Fidelity Contrafund in there. Again, strong return on equity, 48%, pre-tax margin 26%. Debt's a little high, getting close to 100%. That does bump up the ROE number. Trades $1 billion per day, liquid stock. ASML, I mean, you can see these are performing well. Just look at the RS lines now. And on that one, maybe it broke out before it formed a base up there. Very liquid, 665 million. Again, top ownership. You see Fidelity Contrafunds in these. Good numbers, fantastic triple-digit earnings in the last quarter. So these are looking good. Just to flip through a couple of the other ones, let's just look at the liquid ones. What if we just stay over $100 million? KLAC, second stage base, again, CanSlim earnings and sales, top-rated funds, liquid 400 million per day. Great return on equity, pre-tax margin, a little higher debt, still strong. RS line's a little worse on that one. Teradyne, this one I'd say is more of a laggard. RS line is trending down. You do not have CanSlim level earnings and sales. Have 2 funds in there. Note Fidelity's not in that one. As it's building this base on the right side, volume's wedging down. That's not constructive. RS line is trending down. So we want the best of the best. So the top 3 are the ones to study in there. ENTG, Integris. So has CanSlim earnings and sales barely. See, these numbers are not as strong. And you can see they're stacked down here. Just look at the ROE. We dropped down to 27% where we were up at higher numbers with those top 3. Pre-tax margin was a little higher on those. Liquidity was higher, that sort of thing. So you just go through and compare them. But that's kind of how you shop within the industry groups. Several of these stocks will pop up in the Growth 250. Also, all 3 of these were on that table in the paper this weekend of recent buys by top-rated mutual funds. So lots of confirmation of that strength in there. All right, so we have a meeting, a regular monthly meeting coming up. Tuesday, June 8th, 7 p.m. Eastern Time, be a 2-hour educational meeting. Will include at least 30 minutes of Q&A. Tuition's $10. Everybody who registers can attend live. You don't have to attend live. Usually about 2/3 of the people that sign up attend live, it seems. But everybody gets the recording and the slide deck. You can only register for it at the Stockyard Meetup site. First-time registrants will get a copy of last month's meeting, which was May. The agenda, we'll do some wrap-up notes from last month where we covered the IN CanSlim institutional sponsorship in great detail. I'm going to go into more detail on, hey, what about ETFs for CanSlim investors? What would Bill say? Plus when, where, how, and what. We'll talk about the wash sale rule briefly. And then, of course, we'll look at the M factor. We'll do post-analysis, stocks setting up, stocks the group picked, look at some recent IPOs, that sort of thing. Also trying something different this month. So I started a YouTube channel to load some of these videos up. It's called The Stockyard. I started it yesterday, so y'all can subscribe to it. But last month somebody said, hey, the introduction that you do at each meeting, maybe just do that and put it out in advance, since most of the time it's very similar. Overview of CanSlim, not super detailed, but an overview, list of all the resources, things to check out. So I did that. So here's that introductory video. It's about 45 minutes long. Go watch that. That's going to cover all the background, all the administrative stuff. What are the moving average lines on my charts? What's the chart dot system? All the administrative stuff is covered in there. So Tuesday night, we will start right in with the educational content. So we're going to see how this works. So you can subscribe to the channel, and you need to watch that before Tuesday night if you're coming to the meeting. Oh, also on there, I put the May meeting, the full meeting on there. So if you want to watch it, we did cover the IN CanSlim in great detail, how to research it, how to check it, what are the tools for doing that. We covered liquidity, why it's important. So that was the big educational topic. So that entire video has been uploaded also. And then the video I did explaining the certaintied 8-week hold rule has been uploaded too, which I think that's the most misunderstood rule in CanSlim investing. So I did a video on that and covered it in great detail. So make sure you check those out. As again, the benefits of doing that introduction in advance. The introduction is a bit more extensive. I did give a few more details on CanSlim. We'll jump right into the educational stuff. And I think the monthly meetings, maybe there'll be 2 hours total instead of 2.5 or 2 hours and 45 minutes like we have been doing. So hopefully I can do all the educational stuff within 1.5 hours, IPO review, that sort of thing. And then we'll do 30 minutes of Q&A, chart review, that sort of thing, where you can ask questions. Here's a list of the prior meetings. These are available. The ones in green are ordered most often. You can send me an email about that. So there's the one on the weekend routine, because a lot of people have questions about that. And then in January, February, and March, we did extensively covered written sell rules and why you need them and writing a set. So if you don't have a written set of sell rules, spent a lot of time putting those three together, and we covered a lot of material. So questions, contact info, 2 meetup sites, Greenville Eastside IBD meetup is the main one I run with IBD, and then the Stockyard is for signing up for the monthly meetings, recordings, that sort of thing. So you RSVP for this week's meeting at the Stockyard. If you need to email me ordering prior content, you can just shoot me an email, or you can follow me on Twitter. So that's it. We'll see everybody Tuesday night. Hope you guys have a great weekend routine, and we'll see you later.